Right now, for a look at how the Fed's pending rate decision might affect things, the recent banking turmoil, and more, how it's all impacting the markets, investors, we want to bring in Joe Moglia. He is former TD Ameritrade CEO and chairman and former Coastal Carolina University head football coach. Joe, you are somebody who knows markets incredibly well. You're somebody who understands banking incredibly well. How are these two worlds colliding right now? What's happening in banking? How much more is there?
Well, there was some news today that there are some other banks that may be having a problem. And I think we recognized a while ago that you have a problem, you've got to be able to address it, but you don't know what other problems might still exist. And I think the biggest issue for me, Becky, is kind of what's going on with Congress. So last time we were on, Andrew was asking about, well, what do you do? What do you do? If you're the czar of banking, what do you actually do? And frankly, it's like this shouldn't be that difficult to be able to get together. You need the depositors to have confidence in terms of what's going on. You need to have that. So why don't we just do something simple and you raise the limit of FDIC from 250 to $1 million, and any bank, and if you have more than, by the way, and then you guide the investors or the depositors. If you've got more than $1 million, you've got to put it in other banks to protect yourself. But if the bank wants wants to cover more than $1 million, they can take out insurance and then pay it for and pay that themselves.
Okay, that almost seems like it's less confidence building than what exists right now. What exists right now is we basically assume that all depositors are covered. That's kind of the whisper or the understanding, because that's what we've done to this point in this banking turmoil to this point. We save everybody.
And I agree with that.
Yeah.
And that's what I think will happen. If we have an issue right now, that's what's going to happen now. I believe that, too. Right. But when Powell was interviewed last time, he said, my job's not that. My job's to worry about inflation and employment, but we're going to take care of our people. Yellen said something different the day after that, and that's what created some confusion, and the market went down pretty good because of that. So until we figure out, until we're actually able to say we are protecting all our deposits, we believe that's going to happen. But unless we're able to say that's going to happen.
So people are going to keep testing this then?
I think so, yeah. Until Congress gives us something that can make everybody feel confident.
I've not seen any meaningful conversation about what we're talking about. I mean, we've had a meaningful conversation at this table, but not in Washington.
Well, Ro Khanna was just here earlier this morning, and he said what he'd like to have happen is if you're maybe one of these companies that has big payroll or whatever, you can have additional insurance on top of that, but you pay a small fee for it.
Right. Well, I think that's okay.
Yeah.
And I think, again, there are a handful of ways you can handle this. You just have to agree on it and get moving. We talked about this last time as well.
Congress can't even agree on what to do with the debt ceiling.
From a political perspective, they can't pull together. That's what concerns me. We've never been more divided in our country's history, pretty much.
Well, maybe the Civil War.
Except for the Civil War. That's a good point. Well, that wasn't that long ago.
Wasn't that long ago.
I mean, it kind of was.
It's all part of the history of this country. It's not, I mean, do the math. It's a while ago, but 10 years goes, you'll see. 10 years goes pretty fast. We have been divided. I mean, it's like it's different. It's like whenever you say it's different this time, it's really never different.
You would hope that over all of these years...
You're talking about different from the Civil War?
No, I'm talking about different.
That we've been... It's a baseline. We got a problem.
No, the 60s, unbelievably divisive.
Vietnam.
So I'm just saying...
Sure, yeah.
I'm just saying that this is not unprecedented in terms of being divided. We certainly ought to be able to figure something out. We're supposed to be...
We're supposed to... But you would think progress... If you're saying there's no progress, there's no progress in life, that's
hard to come by. I mean, it's a blink of an eye. It's 200 years.
Why do you think the VIX hasn't been higher? Why do you think that hasn't? I mean, with all of the concerns you're talking about and so many people pointing to these issues, how come we're not?
Because I think, Becky, we've been in a range, around 400, 410, 415. 390, we haven't even been under 400 for a while. So the market has been reasonably positive. Now, not the last couple of days. The market has been reasonably positive. And we got down to, we had broken 16 the other day. So I think as long as the markets are still doing reasonably well, the VIX is going to stay under control. If we crash from, if SPY crashes from 415 to 370, 375, the VIX would be closer to 30. But the market's got to go down for the VIX to go up.
But would anything surprise you at this point? Just because when things happened yesterday with the regional banks, some of them dropping pretty significantly, it kind of felt like an oh boy, here we go sort of moment.
I think no, I don't think anything would surprise any one of us. But I also think, too, as the people that are CEOs and the people that are responsible for their organizations, there's too much comment, I think, in terms of what every Congress should do and what the Fed should be doing. And the reality, at the end of the day, our responsibility is to take care of the stuff we can control. And what can we have a major impact on? Our clients, our shareholders, and employees. So focus on what you need to do to take care of that group, and be thoughtful as the market's going up and down. But don't sit on the sidelines and complain about it, and then complain later on, well, I had problems because the Fed was raising interest rates.
Right.